Hey guys, Jason. I here recently just did a video talking about the price of Bitcoin and why it shouldn't be directly reflected to what Bitcoin can bring for the economy and society. And this is my first video of 2015. Well, what I want to talk about now is the hash rate. Now this is something I used to do all the time. I used to do a weekly series talking about the increase of hash rate with mining equipment, and I kind of pulled back from that. But I always do different segments referring to what happened in the last 12 months. January 1st, 2014 to December 31st, 2014. And today I want to talk about the hash rate. So on January 1st, 2014, we were at 10.3 petahashes, which is an absurd number to even think about. If you come from the days like I do, when Bitcoin could be mined on CPU and kilohashes were how you were, measuring it, or it blows my mind to think that even in 2014 we were at 10.3 petahashes. But to think that a couple days ago, at the end of 2014, December 31st, 2014, we were at 335 petahashes. Now let's think about this. Many people look at the price, and I just did a video about this, talking about how the price decreased. It went, dropped from about 700 to about 300. But look at this. The hash rate went from 10 to 335. That's an increase, or a multiplying effect, of 32 and a half. 32 and a half times. Now this is, a byproduct of these companies, and this is true. There are companies now getting into Bitcoin mining. We see a lot of the services. I bought all these Bitcoin miners. I have Bitcoin miners running upstairs right now. I've been recommissioning some old GPU ones that aren't, really cost effective anymore. And really, one of the big things that's changing the market is instead of mining at your home, you don't mine with a CPU anymore. You don't mine with a GPU or an FPGA board. ASICs are the way to go. And the thing to make you cost effective, if you're at you're like me, you're at my house and you're trying to mine Bitcoin, you're not going to be very effective. You can mine in a pool, and you might make a marginally amount of money, but you're not going to make that much. And it used to be, if you could buy 100 miners, you'd be fine. Now we're in facilities where, to be cost effective, to make, a good amount of money, you need to have 10,000, boards mining Bitcoin. That's crazy. Now, we reference sometimes how the hash rate increases, huge leaps and bounds. And I know it's going to sound crazy that I think 35.5 multiplying factor isn't that much, and here's why. When the price goes down, so does the cost effectiveness of ASIC boards. So we talked about how when Bitcoin was $700 a coin, there's a lot more margin for money making if you're mining, if you're a miner, or if you're, nowadays you have a facility for mining. Just like, for instance, I'm going to reference gold. When the gold price goes down below production value, they stop mining. It seems kind of strange, doesn't it? That literally, you just stop. They have these huge multi-billion-dollar facilities where they literally mine gold, and they literally will go through, literally hundreds of acres to make 2 or 3 bricks of gold. But it's, cost effective. They spend millions, but they make the millions back, right? Well, there's 2 different ways when you Bitcoin mine. You can be a small-time investor in mining, like I do, and you just run 24/7. You don't care if the price goes up or down. You're in it for the long haul. Well, these facilities suddenly, when you're having, $10 or $20 or $100,000 a month electricity bills, monstrous energy bills. You're having to pay back all the money you spent on these chips and everything. Suddenly, you have to worry about profitability ratios. So you got to think, instead of buying, you might buy a facility, and you have all these chips running. Suddenly, the next person down the line that thinking about investing in a facility doesn't, because the prices went down. There's still profit margin to make, and there's still profit to make. But the ability to make maximum profitability from the beginning of 2014 to the end of 2014 did alter. Now, it still went up 35.5 times the original hash rate. So, 10 petahashes to 335. But I'm just saying it could have went up a lot higher. And that's something to reference. I know a lot of times we look, and we only look at the statistics of it, we only analyze, and we say, well, it went up 35.5%, or not percent, but times. That's pretty good. It is, but I also want to reference when the price starts going up again, you're going to see hash rate explode. Right now we're at the 28 nanometer boards, and we're almost at to the point where Bitcoin, designing the boards might break below 28 nanometers. We're on it. Intel and all these companies are working on making smaller chip sizes. But I think Bitcoin and the people that mine and produce these boards are right behind them. That kind of blows your mind when you think about it. It's crazy. So in 2014, we saw the hash rate explode, like we did the years before. Now today is January 1st, 2015, and I'm telling you, we're going to see it explode again. Mark my words, if Bitcoin's price increases, and I think it will, some analysis I've read said it might be 500 by the end of the year. Some say 2,000 or above by the end of the year. Nobody can judge that because nobody knows what's going to happen. But I will tell you, the higher the price of Bitcoin, the more petahashes, and maybe even above a petahash. Maybe we'll have 1,000 petahashes, have to come up with a new word again, which is always fun. I remember you used to speak of terahashes, and it was really fun and exciting for me to say a petahash. So maybe by the end of this year we'll be above a petahash. Maybe we'll see miners mining more and more cost-effective mining. But that's your mining update for 2014. Let's get to mining in 2015. Have a great year.